David, great to see you. We spoke last week. It sounded like you had spent some time talking some clients off the ledge. Does that get any easier today?
Yeah, Carl, I guess it does. A 3% up move certainly feels a little better. Although we had a pretty rough ending to the week, so it's not all clear by any means. But I think the big story was really financial instability between the Bank of England, between the rumors about Credit Suisse. And I think the continuation of this whole story of central banks trying to kind of deal with financial stability issues and at the same time deal with inflation, it's got a lot of clients very confused, and rightly so. But I do think they're going to separate that out, and I think at the end of the day, there's more silver linings here than not.
Yeah, we've seen Fed funds come off of their highs. Looking at 4.4 now for March. 2-year got within 7 basis points of 4 today. Do you think we have seen the peak in some yields?
I think we're pretty close to it, Carl. I've been of the opinion that after they get to sort of something in the 4s, maybe mid 4s, they're gonna take a pause, have a look at what happens, and also if they need to do more, I think they may end up focusing a little bit more on the balance sheet. I think politically taking short rates up too much starts to really get. It starts to raise a little bit of eyebrows on Capitol Hill, too, because they're paying so much interest on reserves, so much money going back to the banks. It's just going to get people like Elizabeth Warren and Rand Paul very hot and bothered. And I think there's other ways to pull some punch away from the table, stepping up asset sales if they need to. So I think they can take the pause. They'll be able to. Inflation expectations look very well behaved. I don't know if you've seen the 5-year break-evens today. Look like last I looked, they were at 208. Coming down and the curve's inverting a little bit more. So all that is sort of helpful to the Fed's cause of having anchored long-run inflation expectations, which is really, this is the goal. This is what they need. And the more they get that, the more they can kind of look through some of the short-term issues with inflation not coming down maybe as fast as they wanted to over the next couple of quarters.
Right. To your point, though, to your point about political pressure, today, the Journal piece on the UN calling on the Fed and other central banks to halt interest rate hikes. Stories on the tape over the weekend about Brainerd and Daly sort of looking at the downside of hiking too much too fast. Do you think the Dovehawk chatter right now is becoming more balanced?
At the margin, I would say yes, and I think there's 2 reasons. One is back at Jackson Hole, we had the equity market up at 4,200. Now we have the equity market, ending the quarter below 3,600. They've done a lot to tighten financial conditions, and they can kind of ease back on us a little bit. I don't think they liked the idea going into Jackson Hole that the market was pricing in almost no landing, not just a soft landing, but almost no landing. And now we're getting to the point of taking a soft landing and making it a little more of a hard landing. And I think the Fed probably pushes back on that a little bit. That and the combination of what some of the break-evens have done, I think gives them confidence. Look, it's not a pivot, Carl. It's not going to be like we're going to get some major change. It's just that the rhetoric's going to sound a little less nasty. And I think the market needed to hear that up at 4,200 on the S&P. And now they can kind of take their foot off our neck, so to speak.